Hello dear students, today we are going to study audit under company law. The main objectives of this lecture are to study the legal position of auditor, to study and analyze the eligibility, qualifications and disqualifications of the auditors, to examine and evaluate the powers and duties of auditors and auditing standards, to study the types of audits under Companies Act 2013. Section 138 to 148 of the Companies Act deals with the accounts, audits and auditors. What is an audit? An audit is an independent form of examining any company's financial position irrespective of its size and legal structure. The audit is conducted to express an opinion which helps us report and determine an accurate and fair view of a company's financial position and operating result. The today's topic throws light on the audit under Companies Act 2013, pointing on the importance of audit and auditors. Chief Justice Chakravarti of the Calcutta High Court in Deputy Secretary, Government of India, Ministry of Finance versus S.N. Das Gupta Court observed a joint stock company carries on business with capital furnished by persons who buy its shares. The owners of the capital are not in direct control but left to the executive of the company. The Companies Act provides employment of an auditor who is the servant of the shareholders and whose duty is to examine the affairs of the company on their behalf at the end of year and report to them what he has found. The examination of an independent agency such as the auditor is practically the only safeguard which the shareholders have against the enterprise. Now we will discuss what is an audit report. An audit report of a company is the auditor's formal opinion about the reliability of the organization's financial statements. The auditor can be either internal or independent external one. He checks if the preparation of the company's financial reports follows the generally acceptable accounting principles. The audit report assesses the financial statement validity and credibility. Hence, it must be included in the company's financial report. The importance of an audit report is that it ensures that there are no material errors in an organization's financial statements. Now we will discuss regulations in audit under Companies Act 2013. As required for audit under Companies Act 2013, every company shall prepare a financial statement ending 31st March every year. Such financial statements must be given an accurate and fair view of the company's financial affairs and comply with the accounting norms notified by the central government. Under Section 133 of the Companies Act, the company's financial statement must also be prepared in the form and format that may be laid down for a specific type of company. The expression financial statement required for audit under Companies Act 2013 shall include profit and loss account, or in the case of non-profit organizations, income and expenditure account and balance sheet, cash flow statement, a statement for change in shares if applicable. Now we will discuss eligibility, qualification and disqualification of auditors who will be appointed as auditor. Section 139 deals with the appointment of auditors. Every company shall at the first annual general meeting appoint an individual or a firm as an auditor who shall hold office from the conclusion of that meeting till the conclusion of its 6th annual general meeting, and thereafter till the conclusion of every 6th meeting, and the manner and procedure of selection of auditors by the member of the company at such meeting shall be such as may be prescribed. What are the qualifications of auditors? Section 141 deals with the qualification of auditors. A person will be qualified to be appointed as an auditor of a company only if he is a chartered accountant, while a firm is appointed as an auditor of a company. Only the partners who are chartered accountants shall be authorized to act and sign on behalf of the firm. Who cannot act as auditor? Section 143 clause 3 deals with the disqualifications. A person will be disqualified if he is falling under the following: a body corporate, officer or employee of the company, a person whose relative is a director or is in the employment as a key managerial personnel, a person who has been convicted by a court of an offence involving fraud and a period of 10 years has not elapsed from the date of such conviction. Appointment of subsequent auditor. In the first annual general meeting, the auditor needs to be appointed to hold office for 5 years. However, the auditor's appointment must be ratified in every subsequent annual general meeting. Now we will discuss how the auditor is removed from office. Section 140 deals with the removal of auditor. Number 1, special resolution. The auditor appointed may be removed from his office before the expiry of his term only by a special resolution of the company, after obtaining the previous approval of the central government in that behalf in the prescribed manner. Number 2, subsection 2 deals with the resignation. The auditor who has resigned from the company shall file within a period of 30 days from the date of resignation a statement in the prescribed form with the company and the registrar, and in case of a government company with the Controller and Auditor General of India, indicating the reasons and other facts as may be relevant with regard to his resignation. In case of non-compliance, he shall be punishable with fine ranging between 50,000 to 5 lakh. Subsection clause 5 empowers the tribunal that the tribunal either suo motu or on an application made to it by the central government or by any person concerned, if it is satisfied that the auditor of a company has, whether directly or indirectly, acted in a fraudulent manner in a relation to the company or its directors or officers, it may by order direct the company to change its auditors. In the case of such an application by the central government for change of auditors, the tribunal can within 15 days pass an order that the auditor shall not function as such, and the central government will be able to appoint another auditor. Consequences: the auditor who is removed by the tribunal cannot be appointed as an auditor of that company for 5 years, and there is punishment with imprisonment for a minimum term of 6 months, which may extend to 10 years, and shall also be liable to pay a minimum fine amount involved in the fraud, which may extend to 3 times the said amount. If the fraud involves public interest, the minimum period of imprisonment will be 3 years. Now we will discuss types of audits under Companies Act 2013. As per the Companies Act 2013, various types of audits are as follows. Number 1, internal audit under Companies Act 2013. Internal audit is an independent service to examine a company's internal controls, business practices, processes and methods. An internal audit helps us ensure compliance with the various laws applicable to a company. Number 2, Secretarial Audit under Companies Act 2013. As per the Companies Act 2013, a secretarial audit is an audit to examine the compliance of various regulations and various other laws applicable to the companies. A secretarial audit is an audit where the auditor discloses an opinion as to whether persists relevant system and processes in the company are in accordance with the size and functioning of the company. Also, the auditor monitors and examines compliance with applicable rules, regulations and guidelines. As per Section 204 Companies Act 2013, read with Rule 9 of the Companies Appointment and Remuneration of Managerial Personnel Rules 2014, requires that all listed companies, public companies having paid up capital of 50 crores or more or turnover of 250 crores or more, any private company serving as a subsidiary of a public company that falls into the categories mentioned above shall conduct a secretarial audit. Now another is statutory audit under the Companies Act 2013. Section 143 of the Companies Act 2013 entails provisions regarding powers and the duties of auditors. The statutory auditor shall present a report to the company's shareholders on the books of accounts and financial documents examined by him. A statutory audit is an audit mandated by a statute that ensures that the accurate and a fair view of the book and accounts is presented to the regulators and the public. Unlike internal audit, statutory audits are not optional and must be performed. If a company satisfies specific criteria, the statutory auditor will have access to books of accounts and vouchers, etc. constantly, and he has an authority to ask for further information from companies officers if necessary. The auditor in his report must clarify, besides other things, whether the financial statement represent an accurate and fair picture of the company's affairs at the end of the financial year. Another is branch audit under Companies Act 2013. Where a company has a branch office, the accounts of that office shall be audited either by the auditor appointed for the company or by any other person qualified for appointment as an auditor of the company. The branch auditor shall prepare a report on the accounts of the branch examined by him and send it to the auditor of the company, who shall deal with it in his report in such manner as he considers necessary. In case of local branch, company's auditors, qualified auditor. In case of foreign branch, company's auditor, qualified auditor, and an individual qualified to audit accounts according to the laws of that country. The branch auditor shall prepare a review report on the BOA of the branch examined by him and shall send the report to the company's auditor. Cost audit under Companies Act 2013. Cost audit is the method to verify the cost records of the products or services that contain their manufacturing cost, labor cost, overheads, etc. Cost audit is a genuine review of the accounting and records to be maintained according to cost accounting standards. Section 148 clause 3 of the Companies Act 2013 states that only a practicing cost accountant or a firm of a cost accountant can be appointed as cost auditor and shall conduct cost audit of the company. The board of directors shall appoint the cost auditor. The cost audit shall be conducted simultaneously with the audit under Section 143 of the Companies Act 2013. The remuneration of the cost auditor shall be decided by the shareholders in such a manner as may be prescribed. No individual appointed under Section 139 as an auditor of the company shall be appointed to audit cost record rules 14 of Companies Audit and Auditor Rules 2014. Now we will discuss Section 143, which deals with the powers and duties of auditors and auditing standards. The Supreme Court in Institute of Chartered Accountants versus P.K. Mukherjee observed the auditor is intended for the protection of shareholders and the auditor is expected to examine the accounts maintained by the directors with a view to inform the shareholders of the true financial position of the company. The directors occupy a fiduciary position in relation to the shareholders and in auditing the accounts maintained by the directors. The auditor acts in the interest of the shareholders who are in the position of the beneficiaries. Number 1, right to access. Every auditor of a company shall have a right to access to all time to book of accounts and vouchers of the company. The auditor shall be entitled to require from officers of the company such information and explanation as he may consider necessary for performance of his duties. There is inclusive list of matters for which auditor shall seek information and explanation. The list includes issues related to A. Proper security for loan and advance. B. Transaction by book entries. C. Sale of assets in security in loss. D. Loans and advances made shown as deposits. E. Personal expenses charged to a revenue account. F. Case received for share allotted cash. Auditors to sign audit reports. The auditor of the company shall sign the auditor's report or sign or certify any other document of the company and financial transactions or matters which have any adverse effect on the functioning of the company mentioned in the auditor's report shall be read before the company in general meeting and shall be open to inspection by any member of the company. Auditor in general meeting. It is a prime requirement under Section 146 that the company must send all notices and communication to the auditor relating to any general meeting, and he shall attend the meeting either through himself or through his representatives, who shall also be an auditor, such auditor must be given reasonable opportunity to speak at the meeting on any part of the business which concerns him as the auditor. As per section 101, notice of general meeting must be given before 21 days either in writing or through electronic mode to the auditor in such manner as may be prescribed. Every notice of a meeting shall specify the place, date, day and the hour of the meeting and shall contain a statement of the business to be transacted at such meeting. Right to remuneration. The remuneration of the auditor of a company shall be fixed in its general meeting or in such manner as may be determined therein. It must include the expenses, if any, incurred by the auditor in connection with the audit of the company and any facility extended to him, but does not include any remuneration paid to him for any other service rendered by him at the request of the company. Consent of auditor. As per section 26, the company must mention in their prospectus the name, address and consent of the auditors of the company. Now we will discuss duties of auditor. In Re London and General Bank Limited, court held that the duty of the auditor is to convey true financial position of the company to the members in direct terms and not merely to indicate the means of acquiring the information and arouse their suspicion. Make report. The auditor shall make a report to the members of the company on accounts examined by him on every financial statement. Auditors can access the account, books and vouchers of the auditing company anytime. It does not matter whether the said document are at the registered office or anywhere else. Auditors have the right to access the records of the subsidiary company. These records are essential for consolidation purpose. Auditors have the right to be informed of meeting. He may attend it in person or through his authorized representative, who is also qualified to be an auditor. An auditor has the right to receive information about such matters which are necessary for performing his duties. Number 2, that auditor report shall also state A. Whether he has sought and obtained all the necessary information and explanations. B. Whether proper books of accounts have been kept. C. Whether company's balance sheet and profit and loss accounts are in agreement with books of accounts and returns. Other duty is audit report of government company. The auditor of the government company will be appointed by the Controller and Auditor General of India, and such auditor shall act according to the directions given by them. He must submit a report to them which should include the action taken by him and impact on accounts and financial statement of the company. The Controller and Auditor General of India shall within 60 days of receipt of the report have right to A. Conduct a supplementary audit and B. Comment upon supplement such audit report. The Controller and Auditor General of India may cause test audit to be conducted of the accounts of such company. Liable to pay damage. As per section 245, the depository and members of the company have right to file an application before the tribunal if they are of the opinion that the management or conduct of the affairs of the company are being conducted in a manner prejudicial to the interest of the company. They also have right to claim damages or compensation from the auditor, including audit firm of the company, for any improper or misleading statement of particulars made in his audit report or for any fraudulent, unlawful or wrongful act or conduct. Fraud reporting. If an auditor of a company in the course of his performance of his duties as auditor has reason to believe that an offence involving fraud is being or has been committed against the company by officers or employees of the company, he shall immediately report this matter to the central government within such time and in such manner as may be prescribed. Winding up. As per section 305, at the time of voluntary winding up of a company, it is a mandatory requirement that an auditor should attach the copy of the auditors of the company prepared by him. Conclusion. We can conclude that as per Audit under Companies Act 2013, an auditor shall examine and verify the company's financial statements to depict the company's accurate and fair financial position. It is the responsibility of an auditor to provide shareholders and regulators with confidence in the efficacy of the company's financial position. With this, we end today's lecture. Hope you enjoyed it. Thank you.